Now, we have a whale who's buying up gold and trying to stay underwater. So spot gold is hovering around the 1800 levels since mid-2020s. The stickiness of this level, particularly that the fundamentals change really bearish for gold, suggests only one thing, that there is a big buyer in these waters. Since breaking above 1800 back in 2020 July, price dipped 19 times below 1800 just only to find support. Now if you look at the model value of gold in form of a regression analysis, which includes ETFs, dollar strength, real rates, so pretty much everything, we arrive to a minus 10% valuation, but in reality gold has only lost 2% from its price. So clearly there's a big buyer who's hoarding up gold for the long term. Now, such a whale activity which doesn't show up in the ETFs nor the futures market requires a buyer accumulating in the London over-the-counter market. But if you look into the public data reported by the London Bullion Market Association, we only see a tiny increase of 2 million troy ounces from 307 to 309 million. That would only suggest one thing, that whoever is buying is able to buy in scale, leave no footprint, take delivery and then store the bullions in a secure and invisible vault, and that strongly points toward a sovereign buyer. Think logically, 2020 started with news flooded the market about geopolitical tensions between US, Russia, China, Germany and so on. So one of these countries is hoarding up gold like crazy. So if you're betting on the big gold short, don't hold your breath, because 19 times this buyer helped to push back gold above 1800s. So now that you're up to date with the fundamentals, let's have a look on the technicals. So starting with the bullish scenario, you can see on the chart the white line represents 1800, which I talked about at the beginning of the video, and you can see that below the higher highs are getting actually higher, and you can see the bullish pressure which is caused by a massive sovereign buyer. So every single time the price drops below the white line, which is the 1800, someone is buying and pushing back gold price. Trying to capitalize on this effect, you can see that gold price is now above 1800, which is good for us because we can see the first resistance level, which is the descending trend line at 1844. Going down to the 8-hour time frame, you can see how aggressively was the gold price pushed back up above 1800. Now this was during the NFP data printing and unemployment data release, which finally pointed into one direction and going to give the Fed a clear green light to raise interest rates. Now this isn't the best news for gold, because gold doesn't really like interest rate hikes, but I talked about it in my previous video why I think gold is going to revisit 1900 and 2000 again. So capitalizing on the fundamentals and looking at the technicals, you can see that gold price is now above the 1800. So the next destination we need to clear is 1808. 1808 is an important resistance level because that was the previous weekly pivot point. Going down to the 4-hour time frame, you can see that how difficult it was for gold to break above 1808 level. Above 1808, we are going to have a clear target of 1843. So the kind of market structure you want to see is a higher highs and higher lows, all the way to 1843, 1845. Now this could play out that first the price is going to rest 1800 because we have a new weekly candle opening up. So there's a high potential the price is going to wick back down 1800 and then break above 1808 and then go all the way to 1844. But if price fails to stay above 1800 and goes back down below, then we're going to see a retest and probably going to revisit 1765 or 1780, but this has lower chances because you can see on the market that we have clear bullish market structure, which helping gold price to go higher and higher each week and each month. But the very reason I give you only a short-term analysis, and I'm expecting or forecasting that gold price is going to go up to 1844, 1845, because if you look at the Elliott wave and if you look at the bigger picture and considering the bearish fundamentals overall globally for the gold market, especially if we add the interest rate increase, then we can expect a bigger drop. And I don't know whether they have enough steam to keep gold price pushing above 1800. You can see that previously it did dip all the way to 1680 and then 1722 and then 1756. So there is a high possibility that price is going to revisit 1775. So do not get fooled. Always keep your eye open and always be ready for every potential outcome. So just to summarize it, and we're not finished yet, do not skip the video. because I'm going to explain some important things. So what I'm expecting is gold price to stay above 1800 and revisit 1844, 45, 1840, and then price action and the future will confirm. So I don't want to give any longer term analysis because we don't know what's going to happen with the gold market. So that's why it's important that you only make short-term forecast and analysis, and as soon as you have your daily target, lock it in, realize the profit, and get out from the market. If I just zoom back into the 4-hour time frame, you can see that price pretty much moved sideways within the 1785 and 1824 range. Price is going up and then dipping back down below. So in these market conditions, the best and smartest decision to make is, if you're not sure about the gold market, is to go to other market. You have the currency market, crypto market, other commodities, oil, whatever is your market. Look for other opportunities. You can look back my previous live gold trading session on YouTube where we traded during the NFP, but NFP was not as good in the past 2-3 months. So what I did is I stopped trading gold for the NFP day, logged in all the profits, and I traded USD CAD, Aussie dollar, US dollar, and US 30, which is currently running in a whopping 5,000 points profit. But if you look at AUD USD, it's 80 pips, USD CAD 312 pips. So overall, I made more profit from other currency pairs than from gold this week, because the sideways movement isn't the kind of market I want to trade in. I want to see clear bearish or bullish market structure, because that's easier to trade and has bigger profit potential than moving up and down in a tight range. So if you have no idea what you're doing and you have no analysis on the gold, USD or currency market, the stock market, whatever market you trade in, if you don't have any analysis, go to my website, have a look on the current plans, and sign up to one of the best trading communities I can highly recommend, and provide excellent analysis on a day-to-day basis. And also we have morning briefings every single day, 8 a.m. We have a morning briefing where I prepare the team, the members for the day ahead. I show my analysis and we talk about the fundamentals and what to expect for the day and the week ahead. So if you're interested, go to my website at alphafx.eu, sign up and be part of one of the best trading communities online. This is the Alpha FX.